Hi, I'm David Buckland and welcome to this week's Video Insight. The US budget deficit hit $1.06 trillion in the 6 months to March 2024, exceeding an annualised 7% of GDP of $28 trillion. Net interest paid on public debt was up 43% to $440 billion, and this was partly attributable to higher borrowing costs. Combined with increased expenditure on defence programs, it appears the budget deficit for the year to September 2024 is most likely to exceed the Congressional Budget Office projection of US $1.5 trillion, and $2 trillion is certainly on the cards. And with the US 10-year bonds jumping from 3.8% late last year to the current 4.65%, and the federal funds rate remaining stubbornly high at the 5.25% to 5.5% range, it is unsurprising that gold is having a day out. So far this year, gold has moved up 15% to nearly 2,400 an ounce, whilst the Australian dollar gold price sits at a record 3,700 an ounce. And in the past 20 years, the US dollar gold price is up sixfold, from 400 an ounce to 2,400 an ounce. The Montgomery Small Companies Fund preferred gold exposure includes Gold Road Resources, ASX GOR, Ramelius Resources, ASX RMS, and Red 5, ASX RED. And a brief comment on each of those companies follows. GOR, market capitalisation of $1.74 billion with $146 million of net cash and cash equivalents, as well as an investment portfolio of $470 million, including 20% of De Grey Mining, ASX DEG. Over the year to March, gold production on a 100% ownership basis exceeded 300,000 ounces at an all-in sustainable cost, or AISC, of $1,850 an ounce. That said, the company recorded a tough March 2024 quarter brought on by a significant rain event. RMS market capitalisation of $2.34 billion with $407 million of net cash and cash equivalents. Fiscal 24 guidance for gold production is around 290,000 ounces with an AICS of $1,600 an ounce. And guidance for the June 24 half year is much better than the December 2023 half year. And finally, Red 5. Market capitalisation of $1.5 billion has fiscal 24 guidance exceeding 200,000 ounces at an AICS of around $2,000 an ounce. If the proposed merger with Silver Lake Resources, ASX SLR, is successful, at 3.434 red shares for one Silver Lake share, gold production will double to 425,000 ounces on and the pro forma net cash and near cash would hit close to $400 million, assuming Silver Lake Resources' 11% shareholding in Red 5 is monetised or cancelled. I believe the love affair with the US dollar is waning as a reserve currency, and it will be interesting to see how far the gold price and selected gold companies can go over the medium term. That's all I have time for this week. Please continue to follow us on Facebook and X.